Today, we are going to talk about the importance of preserving capital. In my experience, most individuals talk about returns. I made 30% last year, 40%, 50%, and they never mention risk. The great Warren Buffett, one of the best investors of all time, has a great quote. Rule number 1, never lose money. And rule number 2, never forget rule number 1. Why is this so important? Well, let's look at some numbers. Say you have $1 million and then you lose 10% of the $1 million. That means you lost 100,000. Now you have 900,000. How much do you need to make back the money to go back to $1 million? You need 100,000. Most people will think that, okay, to make 10% on the way down, you only need to make 10% on the way up. The reality is it's not the case. The math of it is $100,000 out of 900 gives you about 11%. Let's take the case of if you were to lose 20%. If you were to lose 20%, now you have $800,000. How much do you need to make it back to $1 million? You need $200,000. But $200,000, now you're starting out of 800,000, not the initial million. So you need 25% to make it back to the $1 million. What if we were to lose 50%? Well, now we have $500,000. We need another $500,000 to make it back to the $1 million. That's 100%. But let's be real here. Say in the financial crisis, we start with 1 million and then we lose 50% to go to $500,000. What are we the most inclined to do? Most likely we're scared to hell, we don't want to lose more money, and most likely we want to sell to preserve capital. So imagine you sell half of your portfolio. Now you don't have $500,000, you have $250,000 invested. So in order to make it back to the $1 million, it's even harder. You need 300% because you need $750,000 out of $250,000. That's 300% to make back your money. Bottom line, most individuals think about return before risk. In my opinion, risk should come first because it's really, really important to preserve capital for your future success.